It gives me great pleasure to welcome on board Mr. Dinesh Khara, the man who runs India's biggest bank, to talk about numbers. And what a show it's been from State Bank of India. It is an all-round beat. That's the tagline I'm using on the channel to define what State Bank of India has reported for the quarter gone by. Mr. Khara, these are outstanding set of numbers. You know, as journalists, we always look at fine print and try to find fault lines. But trust me, this time I cannot find a big fault line. These are great set of numbers.
Thank you very much, Nikunj.
Mr. Khara, before I get into specifics of SBI, what is your read of the economy? Because the numbers what you've reported is also a reflection of the kind of economic comeback we've seen.
Yeah, I think I must mention that during the pandemic period, our retail engine has continued to grow well. And we are in a position to hold the quality also when it comes to our retail growth. In the home loan segment itself, we have witnessed a growth of about 10%. And, happy to share with all of you that we have already become the largest lender and we have crossed the milestone of 5 lakh crore in the home loan book in the State Bank of India. So I think that is something which I would say that is a major growth engine for us. The retail segment itself has witnessed quite a lot of growth, even in the unsecured retail, which is actually, it's unsecured because it's a personal loan, but we are offering this loan only to our salaried employees only who are maintaining their salary accounts with us. We call it a corporate salary package accounts. So there we are growing very well. We have actually that book has become almost about 1,70,000 crore for us. Similarly, from this financial year, we started offering gold loans also, and happy to share that in no time we have built up a gold loan book of 18,000 crore. We have got an ambition of taking it to 30,000 crore by the end of this year. Hopefully, we will be somewhere near there. So I think as far as retail is concerned, we are doing pretty well. SME has also seen growth. It has almost grown about 7%. So that is the kind of a growth which we have witnessed. Even in the corporate sector, what I would say is that the medium-sized corporates, they have started availing their limits which are already sanctioned. And even in the large corporates, we are seeing some traction. So I think all said and done, this kind of a number, these kind of numbers, and also the kind of impetus which has been given to the infrastructure in this budget, I'm sure there is going to be an all-round improvement going forward, and we will have a scenario where the infrastructure will create a whole lot of opportunities for the core sector, and also a lot of employment and lot of opportunities for the personal segment to grow. So I think overall going forward, I expect very good times to come.
Now, State Bank of India has also managed to contain slippages very well in a very tough COVID environment. Are you on course now to in fact beat your own guidance of restructuring plus slippage at 60,000 crore?
Yeah, hopefully we should be in a position to close this financial year below 60,000 crore. That is what our internal goal is. But having said that, I would also like to mention that as and when we receive any such requests for the restructuring, we are having a very pragmatic approach, and we are ensuring that whatever help and support is required to be extended, we must extend that support.
You mentioned your home loan book and also your gold loan book. If I look at numbers, and now most of the banks have declared numbers, State Bank of India has managed to show growth which is far ahead of the industry average. What is leading to this?
One, of course, is our reach. And second is a very focused attempt. During the COVID period, we were very clear that in what areas we need to grow and where we can have a growth without compromising the quality, and that is something which we have ensured. We have tweaked wherever required to improve our delivery on the ground, and ensured that there's a sharp eye and to make sure that the asset qualities don't drift. So these are the things which have really helped us out.
If I compare the gross versus the pro forma restructuring book, and if I compare what State Bank of India has reported, the gap is not large, but for other banks the gap is very large. Why is that the gap between your gross and the pro forma NPAs because of RBI provisioning is not very large?
No, in fact, for quite some time we were having a philosophy of providing wherever we could sense any stress. So maybe that could be the reason that we start reckoning stress early and start providing for it in time. So maybe that is the reason why we don't get to see much of a difference between our gross and pro forma.
So will FY22, sir, be a year when growth is back and bad loans will start becoming good loans? Because that's ideally a ideal time for any bank, that you participate in the new credit cycle and the challenges and the NPAs of the old credit cycle, they start reversing. Is SBI at a big turn for next financial year now?
See, ideally speaking, I would say that we would like to be in that stage, and we are making all possible efforts so that we should get into that stage. When in fact, our stress assets resolution vertical, we are exploring all possible options to see that we should have the resolution of the stress assets, maybe one-time settlement, compromises, also looking at opportunities for M&A, looking at IBC, looking at ARC. We are open to all kind of options, and we are trying and seeing that where it creates the maximum value for us, and we are resorting to that particular option to take care of the bank's interest.
Just to understand, Mr. Khara, that where exactly do you think the next value unlocking will happen for State Bank of India? Which subsidiary next 12 to 18 months could be the one? Because I must compliment State Bank of India, despite being a PSU bank, the way they've taken some of the subsidiaries public is quite incredible.
It's always a journey for taking any such entity to public. So we have embarked on that journey, and we are taking them one by one, depending upon, we have got some kind of a number which you have in mind, and when a particular subsidiary reaches that number, then that's a point of time when we would like to take them to the market. So we have two subsidiaries, one of course general insurance, and second is our mutual fund. So once we will have a sense in terms of the valuation and also the market positioning, that is the point of time when we'll probably go for unlocking value from these companies.
But SBI mutual fund, sir, will always be close to your heart. So I'm assuming that you will always have a priority there.
Well, I think it's the time will tell. As you know, more than my personal priority, as I mentioned, it's a valuation of the company and valuation for the parent, which will be the guiding principle. And for that, I will be very mindful of the market conditions. And at the right and the appropriate time, and when the company is ripe for going to market, we will certainly take them to the market.
One big challenge, Mr. Khara, for you perhaps could be dealing with the cost to income ratios. This is something which in a sense has been an historical challenge. How do you think you will be able to bring State Bank of India at par with industry averages?
Well, Nikunj, I think you actually put a question which keeps on engaging my mind day in and day out. Well, we have got some cost rigidities in the system, and I think I have already reckoned that. And the fact of the matter is the cost maybe will not be in a position to, we are controlling the cost whichever we can control, and which you have actually observed that our overheads are almost flat. So the only way forward is to augment the revenue streams, and that is something which I'm now focusing on. And I think going forward, we'll be in a position to build a revenue stream and also bring in some kind of a very sharper appreciation of the cost to income ratio across the bank. I'm sure that will go a long way in terms of arresting this particular trend of cost to income ratio being more than 50%. Would ideally like to bring it down below 50%. And that is the lever which I am now focusing on. More than the cost, whatever we could have controlled, we will continue to control that. But on the revenue side, we will try to augment the revenue streams.
I'll not extend my appointment beyond these two questions, but While SBI has incubated a lot of great subsidiaries from the AMC business to the insurance to the credit card business, the recent success has been YONO. So post the success of YONO, which is the other business you would like to incubate?
Well, of course, YONO is one part of it. We are trying to leverage analytics in a big way. We have already taken some early steps, and the net result of those steps is that in the quarter ending September, we did a pre-approved personal loan of 5,100 crore. In this quarter ending December, we have done pre-approved personal loan of 5,300 crores. So there is a decision engine sitting inside. There is hardly any cost of operation when it comes to such loans. So you would have observed that in 2 quarters, we have already done underwriting of about 10,000 odd crore loans through this particular channel. Going forward, we'll be building up on this analytic capability, and maybe we'll be coming out with PABL also, which we have already introduced. But hopefully from the next quarter, we'll start reporting those numbers as well. So which means that, this is the new avenue which we are exploring. I'm sure it will create a significant value for the bank and as well as the group. And we started this pilot initially when we started. We had run some kind of algorithms on our database and had identified the customers who can be offered credit cards. And that became quite a successful effort. And with that, now we have started doing all these things also. So eventually, all the commoditized product we would like to distribute through the e-channels. And I'm sure it will help in cutting down costs and also incubate a new capability of the bank, which is analytics. And it can actually be a game changer going forward.
Final question, sir. SBI always has a very difficult role to do, which is in a COVID time, ensure that the banking operations were so smooth, which you did brilliantly, great work from your team. But on the other hand, it also has to meet investor expectations of morphing to new technology and to get into new ways of understanding, lending. How will you manage both? One side are compulsions, which are necessary in nature because you are India's biggest bank. There is a social responsibility, which is more like a fiduciary responsibility, and on the other side are investor expectations who end up comparing State Bank of India with global banks and how they are moving.
I think nobody could be in a better sweet spot than this, because this is something which keeps us agile, this is something which keeps us alert, and this is something which helps us in creating value for all our stakeholders. And I'm sure we'll make all out efforts to live up to the expectation of all our stakeholders.
Well, sir, really appreciate your time. Thank you very much for joining us, and I certainly look forward to much more of you going forward this year.
Thank you very much, Nikunj. All the very best. Stay safe, stay healthy. Bye-bye.